Hello everyone, welcome back. I'm coming up on my 1 year anniversary at Interactive Brokers. That's July 8th, so just a couple days away. And I thought it'd be fun to do like a year review of my portfolio and my options trading since then. And so that's basically what this video is going to be about. I'm going to go over some stats about the amount of trades I put on, the type of trades I put on, and I'm going to talk about how I got interested in options and how I learned to get to the point where I am today. So a lot of stuff to put into this video, and let's get started. So over the course of 1 year, my net account value has gone up 129%. Now this is just the net account value, so this does include contributions. So it's a little misleading if you think about returns. But to me, saving is just as important as making returns in the market. If you aren't saving money, I think you're doing something wrong. So I don't want to diminish the fact that I have been contributing. You know, it's a sacrifice to not spend that money and put it into the portfolio. So to me, I find value in this because it just reinforces that saving is a good thing. Year to date, up 62%. That's actually more than I make in a year, so that's pretty cool. We're only just starting July right now. And for those of you that just came to see like the time-weighted returns, here's that cumulative shot from Interactive Brokers on one of the reports. So I opened up in July 8th, so we're not quite to a year yet, but you can still see like insane returns using the strategies I've been using. And we're only a day into July when I'm recording this video, so my worst month is a month that only has one day in it so far, so negative 0.41%. So I thought that was pretty funny seeing that in there. Obviously, January was an insane month for me. I know the market went down. And that's kind of the beauty about selling options is even if the market's going down, you can still make money. Down here is a graph that compares to a couple of performance funds. And you can see most of those returned around 38%. And I'm up 95%. So selling options, awesome cheat code of life. I'm so excited that I learned how to use these, and I'm always excited to like share my knowledge with other people. So that's why I started this YouTube channel. I know some of you are interested in this, so here's the year-to-date time rate of return from January to July 1st, up 48% for return. And yeah, that speaks for itself. The options are pretty good. I'm not even sure what the S&P 500 has returned right now, but I'm pretty sure I'm above that. The great thing about options is you don't have to be in equities. Most of my time at Interactive Brokers, my account is sitting as cash. Like this cash is securing positions. I sell naked puts, so I can have enough cash to take assignment of multiple positions, but not necessarily all the positions I have on it at once. And I just thought it'd be interesting to include this graphic in here. You can see like these bars are green, and green is cash, and my account is usually pretty cash heavy. Something I think is pretty neat to look at is in March of 2020, my account was only 64,000, and here I was starting in July at Interactive Brokers, and my account was more than I had in March. That's pretty awesome. And if you think about that going down the line, it's insane how much my account has grown. Like I do not expect to get like these returns year after year. Like that'd just be crazy. But since I got them this year, I might as well enjoy them a little bit, right? I thought this was an interesting graph that was in a report from Interactive Brokers, where they show your return per month and compare it to a couple of benchmarks. And even when like the benchmarks are going negative, you can see we can make money because we're selling options. If the market goes down, even if we're selling puts, if it doesn't go down past our strike prices, we're still making money that month. January, I think I had some calls on that paid off immensely. While the market went down, I shot up. In this area, I think these two bar graphs are kind of misleading. At the end of May, my port went down significantly because of IV expansion, and then the next month that kind of settled up. So these two graphs, or these two bars, are a little misleading. Like they both should be like around this level. It's just a matter of when that snapshot was taken. Just you know, that's what that is about. Obviously, July is 1 day deep, and well, I'm finally getting beat by them, right? Had 1 day when Wish went down, and I'm down like 0.4% on the month so far. Some stats since I started trading options, and yeah, I'll let you know I've only been trading options since April. I'm still pretty new on this on the grand scheme of things. And during that time, I opened up 551 legs. That totaled 2,203 contracts. I mean, it sounds like a lot, but if you break it down, was it like 5 a week or something like that? It's not too crazy in terms of trades. Total losers. This took me a while to actually get this number going through my entire log, and that number came out to be 30. I did not count short calls against PMCC legs. Like those I view as like one profitable trade if it ended up profitable. So those are not included in this because I don't view those as losers because the trade was the PMCC. Uh, the contracts of these added up is 100. The total loss from these trades was a little over $30,000. And again, like that's a scary looking number, but remember this is spread out over the course of like 15 months. Like I might lose 1,500 1 month, but at the same time, other positions I might have made 10,000 that month. So I mean, don't let that number scare you. It's just kind of a fun sum. And of those 30 losers, 12 of those I had to roll and ended up coming out ahead. So if you want to take away the money earned back from managing the position, I say this total loss might be more around the 14 to 12,000 range. But it would have been a lot of work to actually get that number. So that 30,000 is a little misleading. Win percentage of those 551 trades, only 30 losers, almost 95% winning chance or winning percentage there. And for those of you that know how I trade, for a long time I was trading at the 30 delta. So every trade I was putting on had a 70% chance of me winning and a 30% chance of losing. But I use the charts. Like if you know how to read a chart, use it and you can put more stuff in your favor. So even though probability of the money would probably average near 30%, like my loss percentage is more like 5% because I'm using the charts to help guide me in choosing my strike prices, and that's why that's higher than the delta I tend to play at. Another stat I thought was worth looking up was how many times I bought premium trying to play the other side against my strategy, and I did that 13 times if you're excluding leaps. 11 of those times I lost. 11 of those 30 losses are from buying premium, and I lost 7,400 from that. And only twice did I actually win when I bought premium, excluding leaps, obviously. So 13 trades, and 11 of those were losers. Do you see why I like to sell options? I mean, yeah, you can make money buying premium, and if you know how to do that, great, do it. But for me, I'm horrible buying premium. I'm a premium seller. And those two winners I got like had pretty good returns, and that's the hook for buying premium is like your returns can be exponential. So those two things brought back a lot of money, but doesn't outpace the losers I had when I was buying premium. Wanted to talk a little bit about how I got started, and for a long time, I've been investing in the market. I mostly did index funds, like the 3 fund portfolio with Vanguard ETFs, that sort of thing. And eventually, well, pandemic came, and my work went, fully remote, which was, awesome for me. I commute like an hour and 15 minutes each way to work every day, and I get an hour lunch. So by not having to commute, I got back 2.5 hours of my day by not having to commute. And then lunch, like I can eat a snack while I worked. So basically, that was another hour. So 3.5 hours back in my day that I could use to spend however I wanted to. And I chose to like spend that time trying to like find some kind of way to make a side hustle, get some income going. One of my things I did is I signed up for like some real estate classes to get a real estate license, and the big plan there was pick up, be a Redford agent for showing houses to people because they could pay like an hourly salary for just showing the houses, and I thought that'd be a decent way to make some little side hustle money. Nice easy job. I like looking at houses anyway. And then the other thing was I got interested in the stock market, so I was spending time learning about the stock market and just consuming everything I could to learn about it. And eventually, I started getting interested in setting up a dividend portfolio. So went on a spending spree and sold my funds. And at that point, my account was down to $64,000 because the March dip was happening. And I started building a dividend portfolio. But something to think about is on a 64K portfolio, if you're building a conservative dividend portfolio, you might be getting 4% or 4% return in dividends a year. So I'd only make like about $2,500 on my entire portfolio, which I mean that's still a lot of money, but in terms of like being a side hustle, 2,500 a year by having all this money tied up in stocks didn't really interest me too much. And then I started I learned about reading charts and decided I'm going to start swing trading. And I mean, I'm be honest, I'm kind of lucky that I didn't blow my account during that part. I was trading like penny stocks. I went through like all these phases that traders go through in a very short amount of time. I was trading penny stocks. I moved on to trading like pharmaceutical stocks and trying to like get daily swings. And I did end up profitable doing that, but towards the end of the month, I was reviewing my trades, and I basically just came to the conclusion that it was just pure luck. I really didn't know what I was doing, and I could have just as easily lost money as I made money. I just so happened to start doing this when the market was had that pandemic low and was recovering from that steep drop. Like anyone could throw a dart at a board, play on a stock, and make money off it. And that's basically what I was doing. So I was about to give up on actually trying to be active in my portfolio. And then I met Randy Miller from Retire with Options. I mean, rest in peace. Great dude. He was trading options, and he was willing to share his knowledge with anyone that would seek it. And he was holding weekly classes on Saturday through Zoom where people can join and ask questions. It wasn't too structured. It's similar to like how our Discord runs on Thursday nights when people can come in, ask questions, talk about whatever they want to talk about. And he got me interested in options. And my first options I ended up doing was I bought some SPY puts, and within 10 minutes, I gained $340. Like, wow, this is awesome. So of course, I mean, I did the same thing. If it worked once, it'll work again, and no, it didn't. But like these trades really got me interested in like learning more about the power of options because like even though I lost on I ended up losing between these two trades, I saw quickly how much money you can make using these. And if you think about the return, like 340 on about $1,000 here, that was about 30% gain off that in 10 minutes. I just saw like that was mind blowing to me. It made me very interested in options, which is kind of funny because about 2 months before I got into options, I was talking with a coworker and we're talking about like retirement stuff, and somehow we started talking about options. And I was like, I'll never trade options. That's so risky and it's just pure gambling. And in hindsight, here I am trading options and it's very successful with it so far. Knock on wood. And yeah, so that's how I got interested in options. Now, once I was interested, obviously I was going through YouTube, consuming every video I could to try and learn how can I make this be profitable for me. I mean, options just really interested me. Like it's all math and figuring out like a puzzle. Like you can make your own risk profile depending on your view on the stock. It's to me it's really exciting. I love getting into it. And for me, I found looking up YouTube videos and watching them was a great way to learn about them. I watched so much YouTube about them. It's because you can't just trust one person with what they say to be fact. Go out there and find other sources and make sure that it is true. Because one person could just have one lucky year, or they could be selling you some course and telling you lies or whatnot. Just, go out there and fact check. The thing that helped me learn is Discord. I met Randy through Discord in a dividend server of all places, and also someone else in Discord. Not gonna say her name because I'm sure she doesn't want to get 1,000 messages about getting invited. But met someone who started her own private Discord and invited a small group of people. I think there were 10 of us that she invited, and basically we meet every Saturday night and talk about options a little bit. Over time, we talk about options less, but like these chats go for like 4 hours through the night, and we it was just great because it's a small group of like-minded traders bouncing ideas off each other, learning. And what's great about social media is you can meet people that you would never have met. Like all these people in this small private Discord live across the country. We come from different walks of life. We have a millionaire in there. We have people with less than 20K. Like it's amazing all the people you get to interact with through social media. So like use that as a tool because you can learn a lot from having conversations with other people. Uh, if you don't have a group of people that trading with, we do have a Discord server that Randy started, and we're keeping that Discord running. I'll put the link in the video below. Go in there, join, have some conversations with people, and just learn. A lot of people are out there willing to share their knowledge. You just have to go out there and ask for it. You might be sitting there thinking, okay, great, Thumper, you doubled your account, but how did you do that? And well, the simple answer is I sell premium. I basically act as like an insurance agent or a casino, depending on what metaphor you want to use. And a majority of my stuff is I'm selling puts. I mostly do them on stocks that I know, maybe products I use, like Apple. I'll play them multiple times, and I am doing this video right now on a Mac, and I just bought an iMac. Like this is a company I use their products. I like their products. I think they're going to continue making money in the future. I'm bullish on them because of that, and it's a stock I wouldn't mind holding long term. I don't need to hold it, but I wouldn't mind holding them if I needed to. So when selling puts, if you don't mind holding that stock long term, your worst case scenario is you got paid to wait for a discount to buy the 100 shares at. And then you just hold it and you can sell cover calls against it or whatever you want to do. But I mean, options, even if it's just to get into positions, are awesome. The other thing that helped me get my returns up insane amounts were PMCCs. And that's when you buy a leap and then you sell a call against them, which is a cover call because of the leap you have. And this is because leaps are like extremely leveraged, and I'm very picky on when I buy the leaps to set up these PMCCs, because if a leap goes down, like you're losing money pretty quick. But vice versa, if your stock is moving up, your leap's gonna gain money pretty quickly. So they're pretty leveraged. So use them sparingly, or at least be greedy when you choose to enter them. And then see the other part is I sell calls. Obviously, I just talked about PMCCs. I've sold cover calls, such as when I get assigned some shares that I wouldn't mind holding long term. I'll sell cover calls against them until they get called away. If I don't have the stock and I want to sell calls because I'm feeling a little bit bearish, I'll sell a call spread, and that's when you sell a strike and then buy a call further out to limit your max loss, because I don't do naked calls. I've proven I have a strategy that works for me that I can make money off of, and part of that strategy is risk management. I don't want to have one position to be able to wipe out my entire account and take me out of the game. Like you need to stay in the game to make money, so don't let one position theoretically have any chance to take you out. And since naked calls can go to infinity, like why put that out there? Just buy that insurance, make it a spread. Just the cost of doing business, Going back to the puts that I was talking about, just kind of want to talk about like the scenario of like, what's your max loss, like kind of thing. Looking at Apple, say it's trading at 138, which it was today when I was looking. A contract 35 days out, you can sell for $150. And why would I sell the put instead of buying the shares? And we're going to take a look at that right now. So assuming I'm okay with actually buying 100 shares at 138, what happens instead if I did sell the put contract instead. And we're going to say that Apple tanks and goes down to 120. Had I bought the shares at 138, I'm now down $1,800, even though I have $13,800 tied up in this position. This put that I sold, let's say at expiration, we're at 120, and I get put those shares. I just bought 100 shares at 130, so I still have the 100 shares that I have over here at the time of expiration, but I got into that position cheaper because I bought the shares at 130, and I got paid to do that. So I'm only down $850 by selling the put and getting the shares. Whereas had I bought the shares, I'd be down $1,800. So another thing I would like to consider is, at the end of this, because I got put the shares and I took assignment in this scenario, this position cost me $13,800. This one cost me less than $13,000. So it took me less money to get the 100 shares because I sold the put contract to get into it. Like the downside is if Apple goes up to like say 150, well, if I had the shares, I made money, but my put, I'd only have made $150, and that $150 is awesome because I don't really have much money like in this position. My margin maintenance on this position would be very minimal, maybe 3,000. So 150 on return for that 3,000 margin is pretty insane. Probably more than you get for that going up. And I guess if you like this video, like, share, subscribe, and happy trading next week, guys. I am not a financial advisor. Any information included in this video is for informational and entertainment purposes only. It is not intended to be investment advice. Please seek a licensed professional for investment, tax, or legal advice.